Options Friday. Good morning. Here's a weekly chart of the beaten down dollar ETF. These highs here come all the way down through here on that weekly area, and we've had a couple of weeks on the upside. The dollar is much stronger, the US dollar today, and that means that doesn't bode well for stocks because of that kind of trade that's been on this market for so long. This particular ETF had made the highs here in 2011, have gone nothing but straight down. We've had a couple of, we've had a turning point down here in these weekly MACD bars. We've had a crossover. We got extremely oversold on a weekly at 4.49%. That's when you want to be the biggest buyer. Just like when markets are oversold and that same reading could read 92, 96%, you got to be selling short. Standard technical analysis, however, the SMF trading platform has a much better view than just taking a look at this weekly chart. For the sake of it, though, we are going to take that reversal high and we're going to come right down through here. That's where the secondary part of a downtrend starts to come up. You're above the blue line, the 10-week moving average. When this particular ETF, which has a lot to do, I mean, there's different things about the dollar, though. This is just an ETF related to the dollar. Index Bull. Okay? US dollar index Bull. That has been sold down. And when we're breaking out intraday higher here, and the fear indicators are breaking out, that means that equities are being sold short off of the top. That means that throughout the correction that we called for 3 weeks ago in the broader indexes, is that some of this ETF is good to monitor, because if we're going to be breaking higher here, then stocks will remain sliding from their overbought bull rallies back down to levels where they're viable again. The correction is underway. It's the third week of the index correction, and also 1 week, 2 weeks, this being the third narrow range week right here of that dollar trade going up, and they both kind of go together. QE2 ends in June. Everybody is short the dollar and have been for a number of weeks and months. When everybody has to cover to come out and buy their shorts back in that dollar short trade, and they get squeezed, the higher that dollar goes, you're going to see where the cross relationship between miners, gold, silver, commodity, and energy, particularly in those areas, trade against the potential breakout in the dollar that we said was coming back over here. And when the dollar started to go higher, that's when the Dow Jones and the S&P, NASDAQ Comp and S&P 500 started in their correction, overbought correction phases from a beaten down, oversold dollar. There is a correlation between these instruments, particularly using intraday trade management. Sign up at stockmarketfunding.com. Get out of that retail investor and that retail stuff. Let's get you in here where you can get down to the core specifics of instruments, financial instruments, and how they work and how they correlate and how they go back and forth, so that you will know how to manage your portfolio. Risk management.